This is a great weekly video. I promise this one, I think, makes a lot of sense if you're a realtor or a builder looking to sell a home. So a lot of stuff happened. Yesterday, the Fed did raise their rates 25 basis points as expected. So it's already baked in the cake. Again, I think next week, next Wednesday is the big move, or the start. It's not the destination. It's the start of where rates start really coming down in a meaningful way over the next couple months. So let's get into this. This is a good week, I promise. Today's May 4th. Technically, I said May 3rd, but it's May 4th. My daughter turned 13 today, by the way. So I'm a dad of a teenager now. But rates, guys, I just Googled just to see what came up. Mortgage daily rates. It shows 7.2. It also, this is just the generic Google. Truthfully, guys, rates, we've seen them start coming down. They're probably in that mid-6 range. We've seen low 6s even right now. So just throwing it out there that you can't always believe what's on the internet. But here's the deal. Yesterday, the Fed met, they raised rates. They're going to become more quote unquote data dependent. As we've been saying for a long time, the data is coming. They're driving, looking in the rearview mirror. But something to note, the jobs cuts, it's now being the word, and I don't, who tracks this? I don't know. But apparently the mention of job cuts by S&P 500 companies now is said more often than the word labor shortage. So that is good. And we don't want people to lose their jobs. We don't want the economy to go to recession. But the reality is, we do need that to help control inflation, because when there's not as many or not as many folks, there's a labor shortage, you got to pay people more. Now that they're cutting jobs, you don't have to pay people as much, unfortunately. So that's just why that's going to help deflation come through. So this is what I was going to say. I made this slide, so it's not real pretty, but it is what it is. But we were making this point to somebody yesterday. If somebody bought a $500,000 home and they were putting down 100 grand, so 20%. So somebody's putting down 20% on this $500,000 home. The current rate, let's say, was 6.25. Okay, so that's the interest rate. But the builder in this case was giving the buyer $30,000, which is 6%. That's allowed. You can give up to 6%. So they give them 6%, that 30 grand. Guess what? We're going to use that money for this particular buyer. This isn't always the best strategy, but for this buyer, for whatever it was, it made sense, and the rate got bought down to 4.5% with that money. So the rate went to 4.5%. And if you don't know this, let me just tell you this fact now. That is the equivalent, and you'll see there at the bottom, that is the same mortgage payment. The 500 purchase price with the 4.5% interest rate has the same payment as if today that home was being sold for 430 at today's rate of 6.25. In other words, you can buy today's higher priced home for the same payment using that 30 grand. Instead of reducing your sales price, realtors and builders, instead of reducing your sales price by $70,000, you can give the buyer the same payment as if you did using that 30 grand. So the reason why I share this, about 2 weeks ago, we told you in this weekly update, and I'm not a big fan of Diana Oleg, but here she is on CNBC from 2 weeks ago. I will advocate this article as just a way to motivate your sellers on your listing presentations. 5.5 is where buyers that are on the fence are saying, man, that's their strike price. That's where they're going to jump. That's where they're going to do something. And again, that's why we think this year is going to be a very good year. Later this year, in the next 6 to 12 months, I foresee rates being in that 5.5 range. So get ahead of the curve, sell your homes now, right? Before, I mean, if you're trying to sell now and you're a seller doing this, or if you're a builder and the home's sitting there, give them the 5.5 today and get those buyers off the fence. Because what's going to happen is when rates go down, later this year, you're going to see all these buyers come out of the woodwork. So tomorrow we're going to have a good time. But here's the deal, guys. This is an advocate. So I threw this in here just because I got lit up on social media. Apparently, somebody in my office told me about it. Like, cash out refinances. I'm not saying everybody should do it. I am saying if you look at this graph, the personal savings rate for Americans, we are at a very low period over the last 6-8 years, right? So during COVID, everybody saved their money because there's nothing to do. Well, if you look at the graph on top, the savings rate is super, super low. People are not being able to save as much because inflation's really eating into their checkbook. So the credit card balances, check that out. That is sky high as well. So we got more credit card debt, less people saving money. But here's the good news. With all the home appreciation as of late, check this out. This is pretty staggering. From 2008, you can see all the way to 2022, the average loan to value, meaning the average person apparently has 58%, almost 60% equity in their home. That is a ton of money sitting in a home. So if you're somebody with a high credit card balances, you're like, man, what can I do? How do I get under this? Here's the deal, guys. We know you got the 3% or whatever rate you got from a couple of years back, super low. What people need to focus is what is your blended rate, right? So if you're somebody with a credit card, big old credit card bill of 18, 22, 23% interest on that, take that into consideration with your 3% because the actual interest you're paying in life is way more than that. Look, 6.5 is higher than 3. There's no way to dispute that. However, if you bought a house 3 years ago for 500 grand, today that home is worth 665 based on the numbers. Your balance from 400 is down to 373. So look, guys, I know you can say, oh, this, I don't want to give my 3%, but if this saves you $1,000, we just ran a scenario lately, somebody's going to say $1,400 a month, going from their 3.2 or whatever it was up to a 6.5. So it can work. It's not for everybody. Call us if you have questions. And here's the other part where I got lit up on social media. People are like, yeah, I said it's a great time to buy. People are like, you're just self-serving mortgage guy. Look, the fact of the matter is house prices are still going up. The existing inventory is super, super low. If you don't believe me, ask any realtor out there. Their biggest pain is that they don't have any homes to buy. Buyers are out there looking. Nationally, you guys can see this. This is the chart of the biggest, most volatile markets. You got San Francisco, you got Seattle, you got Chicago, you got all these things. They're still going up. Did they peak? Yes. Did they come down? Yes. But in Dallas, Fort Worth, where I am, where the majority of you are, we haven't seen that. It's just, this is the biggest, most wild, and you can see prices are back on the rise. And in fact, in Plano, I talked to an agent yesterday, somebody put it in, one of our buyers, unfortunately did not get the contract. It was 430. I think it was 430 purchase price. They made an offer for 480, 50 grand over. That's more than 10%. And they were the 5th highest and didn't win the offer. They had 19 offers on the home in Plano. So if the home's updated in a good area, it will sell. There is still a lack of inventory. It's real numbers, guys. Here's my public service announcement. I've gotten a lot of calls this week. Contest your property taxes. I'll tell you what, if it's in Dallas, Evan Fetter, and you can find it, email us, we'll get you his info, or just Google him. I think it's Lower My Texas Taxes, but Evan Fetter, just look that up. But if you're Collin County, it's tough. Rockwall, those type of places, it's tough, but Evan's a Dallas guy, and the Dallas area can be helped. If you're an older home in Collin, you might have a better chance. If you're new construction, you may just have to take your lumps. Collin County is apparently very tough, according to him, but you guys can see the numbers, how much everything is up in the Metroplex. Pretty wild. Omni Frisco, it's open, official. It's $500 million complex, 2 golf courses. If somebody goes, let me know how it is. I've actually known somebody got to golf out there and they said it was really cool. So good for them, good for us. Guys, get social with us. That $500,000 example I gave earlier, now I think that's up on social by now. But we'd love to see them. Come join us, come follow us. Let us know if we can help you guys in any way. As always, guys, call us if you have any questions. Let us know what we can do to help you get your home sold. We appreciate you as always, and have a great week.